Hi, I'm Steve Dudash, IHT Wealth Management. Welcome to this week's Wealthcast. All right, I want to talk about the big story this week. Facebook. Facebook lost more money in a single day, market value, in a single day than any stock ever has in the past, and therefore it's getting a lot of publicity. And I wanted to break this down. One, we warned everyone this was coming. We were on, I think, Fox or CNBC 6 weeks ago or so telling people this was coming. So I want to reiterate on that. Two, what does this mean in real terms today? And three, most importantly for you guys, because we're getting a lot of these calls and emails. Do we buy? Do we sell? What do we do because it's down? It's made such a big move. So let's recap first. First, we knew this was coming, guys. We warned people that this was coming. Facebook stock had to get hurt by what, I don't want to call it a scandal, but by all the data stuff that was going on a few months ago. They self-imposed restrictions on using that data, which means the people that were paying for that information, the advertisers and stuff, that were paying to target people with that information, couldn't do that anymore. Now, Facebook self-imposed that, and part of that was because the regulatory world was looking at them pretty hard, so they had to self-impose it. But this is the same thing that happened with Wells Fargo. They had a lot of internal data. They used it really well, but they used it to an extreme level without people knowing about it, without disclosing it, and therefore they got in trouble. Wells, Facebook, same story, and we were on TV warning people about this. And I got a lot of heat. I want to, just one more thing. I got a lot of heat because right afterwards the stock went up a little bit, and a lot of people were giving me a hard time about it. And I kept saying, just wait, it's coming, it's coming, it's coming. It has to come, and it did. So, what's this mean for you? Normally, we're very contrarian. Okay, so normally, if we saw something pull back 20%, we're like, hey, is this an overreaction? Is this emotional based? Can we take advantage of it and buy in at this low level? We do that all the time. But then the flip side of this is Facebook's not an overreaction. This isn't emotionally based. This is their earnings are down. Our forward earnings are going to be down for a while. And therefore, the price is not worth the same. This is not an emotional decision here. This is math. And so that's why I wanted to help clarify one thing to people who are asking those questions. Facebook is no longer a tech company. I know it sounds like a tech company. It used to be a tech company. It's not a tech company anymore, all right? It is a slow growth media company. It is a monster media company. That's who they really are, okay? So the question is, do you want that in your portfolio? Are you buying Facebook because you think that it's this high-flying tech stock? It's not, you know? Or are you buying it because you want, which there's nothing wrong with this, a slow growth media company? Because Facebook stock's down right now. Long term, it's going to go back up, but it's going to go back up slowly, like very likely over time, like what a large media company would do. So I'm not trying to be vague on this, but that when you're asking yourself, do I want this in my portfolio? That's what you're really asking yourself. Do I want a high-flying tech? Go find something else. Do I want a slow growth media? Then maybe that is a good fit for your portfolio. Just try to keep that in mind. And if you want clarification on that, call me anytime. I hope this helps. I know I'm going a little long on this one, but it was a pretty big story. It was the biggest loss of a stock ever, market value-wise, and so it's worth taking a little time to talk about. Call, email, whatever, if you have questions along the way. Have a nice weekend. We'll talk. Take care.